Hey everyone, good morning, afternoon, or evening. But before we begin, just a reminder that this video is 100% AI free. This is real people talking about real life things. With that said, I'm not a financial advisor and I'm never going to tell you to buy, sell, hold. Do your own due diligence and conduct your own research before getting involved in this or any other crypto project. And if you like the content I provide, like, subscribe, share, hit that notification bell. It's a small click for you, but it's a big deal for me. So I had a conversation a few days ago with Jay Rogers. Now, Jay is the CEO of Infineo, and they are pioneers of utilizing the blockchain and digitizing life insurance policies. There's a lot to unpack in this video, and all the resources, how to contact Jay, how to find out more, will be in the description box below. I will also have everything time-stamped, so you can click to whatever area you want. Have a fantastic day, and let's get started.
Imagine your investments tied up in the uncertainty of global markets, a reality where your financial security is at the mercy of volatile market swings. Traditional investments leave billions of dollars vulnerable, creating anxiety and uncertainty among investors. Meanwhile, millions around the world lack access to bank accounts, live in high inflation environments, and have limited financial options. They seek access to USD-denominated assets that grow over time, providing a stable financial solution amidst economic uncertainty. Now, imagine a world where investments consistently grow and offer unparalleled security, beyond the reach of typical market volatility, while providing access to a stable asset class for those who need it most. A place where stability isn't just hoped for, it's expected. Introducing Infineo's Sound Token, your direct link to stable financial growth. Sound tokens bypass traditional financial intermediaries, offering you a secure path to financial independence. Sound tokens are unique, representing fractional shares in the cash values of life insurance contracts. Life insurance has served as a foundation for wealth creation and protection for over 200 years, and each token is anchored by the historical stability and growth potential of this financial instrument, securing your investment against market fluctuations and backed by the strength of the carriers, which historically have proven more durable than commercial banks. Because they are backed by the resilience of permanent life insurance, Sound tokens can be redeemed for their cash surrender value at any time, ensuring complete liquidity and zero interest rate risk. This makes them safer to hold than treasury securities. Sound tokens enable long-term financial planning with their beta of virtually zero, meaning that their annual returns are completely uncorrelated with the stock market. This dependability reassures investors that even in a volatile economy where other assets are crashing, their Sound tokens will continue to provide the stability and growth they were designed for. The Sound token offers superior risk-adjusted returns compared to other asset classes, boasting a historical Sharpe ratio exceeding 3.0 over the past 3 decades. This exceptional performance underlines its stability and positions Sound tokens as a strong option for protecting wealth from inflation and economic instability. Sound tokens transcend traditional investments. They are a cornerstone of a global movement towards financial inclusivity. By democratizing access to stable, asset-backed securities, Sound tokens extend financial freedom and security to millions globally who lack viable alternatives. Join the future of investing with Infineo and be part of a movement that champions financial security and global access. Visit infineo.ai to get started.
If you could take us through what you do, like I'm like a 7-year-old.
First of all, thanks for having me. It's great to be with you, Scott. I think your request is well received, and it's one of the reasons that I'm in the position that I'm in. I'm lucky to be surrounded by amazingly intelligent developers and product creators and marketers. My gift is really in taking complex ideas, and once I'm around them long enough, I have an ability to break them down into digestible forms for what I'll call normal folks, which I consider myself to be, right? And not that there's anything wrong with people who can think, into the stratosphere and do all sorts of development and design complexities. But for me, it's really I need to be able to understand it, right? And I know a lot of people, especially in blockchain, and not just blockchain, but now moving into AI and the intersection of AI and blockchain, and being able to understand the projects that are coming out and the tools that are coming out is going to be really important. And so I'm excited to discuss this topic with you. My role is the CEO of Infineo. I have been in that role since the beginning of this year, but I'm one of the founders of Infineo. And Scott, tell me, would it be helpful for me to just give you some background on how we've gotten to where we are today?
Please, I would appreciate that. I'm sure people are
Yeah.
really curious to find out.
Yeah. So look, my background, I graduated. I'm from all over. So from the Northeast, Boston, Southeast, South Carolina. I was born in Kingston, Jamaica. My parents were missionaries. And now when I moved back up to Boston, I went to Boston College and graduated in 2010, went right into the life insurance industry where I worked for New York Life as an advisor. And then as a partner, I eventually moved over to the Mass Mutual system as a partner, managing a team of advisors. And it was while I was there, I learned about a very niche space, which was the use of a tool called collateral assignment split dollar plans as a method of key employee retention at nonprofits, specifically credit unions. And I mean, when I say niche, there's probably 5 companies in the country who know how to do this well. And so what we were doing was the end result was the sale of a very large life insurance product that was designed to retain a key employee in the form of a loan. So the institution would make a loan to the executive would buy a very large life insurance policy and assign it to the employer in exchange for a benefit in retirement. And when they pass away, the employer would receive that loan back, right? So it kind of is a self-completing tool. It's a good instrument for institutions that are in the business of lending money, right? And what it does is it enables them to leverage opportunity cost instead of accounting cost on their balance sheet. So that's the industry that I've been in for the last decade, starting in about 2015. In 2020, my business partner and I started asking ourselves the question, how do we help these institutions get these assets off the balance sheet faster, right? Because waiting until the death of a 40-year-old, that's a long tail. And when interest rates are at 1%, right, it's not the end of the world. But when interest rates climb to 4, 5, 6%, as we've seen in recent years, that opportunity cost becomes much less palatable. And so we developed a first of its kind securitized pool of life insurance assets where we would go back to these institutions and acquire the promissory notes from the institutions themselves in exchange for a certificate in the trust, a pass-through ownership structure. And we would acquire an assignment from the executives who owned these policies of their benefit, their asset into the trust in exchange for a commitment and a benefit in retirement. So now once we are able to control this whole asset, it gives us a lot more optionality. And when you've pooled hundreds of them together, there's a lot more flexibility in how you can execute and manage these assets to drive additional yield. And that's to the benefit of all of the parties involved. Our company was called Capaxa, and the product was called LifeNotes. And the LifeNotes Trust is an amazing tool that is being used by hundreds of institutions today. In 2024, after we had grown to about 500 million in assets, we knew, and from day one, our goal was to use this trust as a catalyst to tokenize life insurance. We knew that moving life insurance on chain and being able to take advantage of the efficiency of administration, transparency, and speed was something that would be very advantageous for the market, right? Certainly for credit unions and the marketplace of institutions, but eventually for retail users. And as I went out, I remember calling an attorney out in Colorado that I knew, and I said, "Hey, this is what I'm looking to do. Do you know of any law firms that specialize in blockchain and life insurance?" He said, "I do, but I actually just spoke with somebody that I think is doing what you just described." And he introduced us at Capaxa to a company called Infineo. And we had a few conversations. Light bulbs went off. We met in New York City in November of 2024. And in that meeting, after some time together, and this meeting, by the way, was at the headquarters of Figure in New York City, which is one of the largest, if not the largest, real world asset on chain right now. It's a HELOC company started by Mike Cagney, the founder of SoFi, and that'll come into play in a little bit here. But they have a company called Provenance, which you may be familiar with, Scott. And so we met in their offices. The CEO of Provenance came in. He listened to both of our value propositions, and he said, "My gosh, you guys are tailor-made for each other." So they've built the technology to tokenize life insurance, and they were then going to go out and try to acquire life insurance assets. We've built what the largest single trust of life insurance assets, and we're then going to go and build the technology to tokenize life insurance. By merging, we were able to fast forward our business plans by 3 years. And so now we've been together for a little over a year. That merger closed in December of 2024, and it's now February 2026. It's been an unbelievable year together with massive development. And we are one of the fastest growing RWA firms in the world. And we're extremely excited because I truly believe that life insurance is the best use case of a real world asset to be backed by a stable coin. But life insurance, if you can break it into its component parts and back those component parts by specific tokens that enable those assets, which are key, unique, differentiated assets, to be backed by tokens that mirror that value proposition, you can provide a value to those assets themselves that doesn't currently exist, right? And we get into life insurance, people we certainly won't be able to educate everyone on how all life insurance products work today, but you've got whole life insurance, universal life insurance, variable universal life insurance, indexed universal life insurance, right? There's a whole host of permanent insurance products before you even get into term insurance. And those products are going to be broken into some forms of cash value growth and some forms of death benefit growth. And depending on the product, usually those are products that, if funded properly, their carriers themselves provide a guarantee that they will go up in value each year. And that's what's unique here, right? That's one of the unique features is we're not talking about an asset that's going to go up by 30% in a year, but we are talking about an asset that is not going to go down in value in a year. And that gives us a very unique opportunity when it comes to the creation of these coins and what makes them or doesn't make them a stable coin.
From a standpoint of, say, for example, the retail investor getting involved in doing the tokenization with life insurance, how, for lack of a better term, like how would they benefit?
How do they benefit from this?
Right.
Yeah, man. Great question. So Scott, let me ask you, because this will be helpful for how I describe this.
Sure.
What is your familiarity with life insurance?
I actually have a policy that I've had for about 8 years.
And is it a term policy? Like, is it going to go away eventually, or is it a whole life policy that builds cash value?
It's a term.
It's a term policy, yeah.
Yep.
So this use case is best described for whole life products.
Okay.
Like, that's the best way to understand it. So let me explain what this does and why I think actually it will encourage other people to own whole life insurance. So what you own, Scott, is really an evolution of what life insurance is. Life insurance in its origin was a contract between a mutually owned company, almost always, and an individual that you would give me money, and when I died, you'd make sure my family was taken care of. And along the way, my asset, my policy gave me ownership in your mutual company. So it built cash value. The dividends went into my policy. It was a stack of real assets that I was able to take advantage of while I was alive. But if I left it alone, there'd be a lot more death benefit that was there when I passed away. And the way that it works is the cash value grows and the death benefit grows slightly less. And at policy maturity, which most companies is either 100 or age 120, meaning if you're not dead by then, they're literally going to pay you,
Yeah.
right? Those two dollar amounts meet my death benefit and my cash value. Why is this unique? Why is this a unique value to the user and to the retail user? Well, the government does not tax individuals on death benefit of life insurance. It will be a part of your estate. If your estate is, quite large, you may have an estate tax issue, and there's ways to mitigate that. But death benefit is not considered income, right? Also, the cash value while you're alive, as long as you don't take out too much and implode the policy, loans against your cash value, which are considered loans against my future death benefit, are also not considered income. So imagine a world in which you're funding a life insurance policy. We'll just use, well, I don't want to use a single carrier, but it's a mutual life insurance company, okay? And let's say it's $1 million whole life policy, and my monthly premium is $500, right? Let's call it $10,000 a year, just for round numbers, okay? That sounds like a lot of money. But again, it's money from my left pocket to my right pocket. In the early years, it's going to take time for it to grow. But let's say by year 15, I've put in $150,000. That asset's probably going to be in the neighborhood of 200 to 250,000 in cash that I could have access to if I needed. Right? It's a long-term investment, and my death benefit's likely over 1.25 million at that point, right? It's growing, all of it, right? These insurance carriers have guarantees in their dividends and how they grow. Okay. Here's where we get to how blockchain and tokenization really adds value. Okay. What do institutions use these assets for? Why do banks and credit unions and massive institutions own billions of dollars of life insurance? It's because it is one of the purest forms of blue chip collateral in existence. Okay. A bank loves life insurance as collateral. Cash value life insurance as collateral enables them to allow their other institutions to do big things. So I'll tell you what banks or credit unions do often. They own what's called BOLI, bank-owned life insurance. Let's say I own what they do is they say, hey, we got 30 employees. They go to some insurance carrier. They say, hey, I want to invest $100 million in cash value life insurance. On these 30 employees, they give them a census of personal data. It's called group guaranteed issue. They get guaranteed issue on these people. And it's because they're driving yield. That'll grow 4 or 5% every year, right? Okay. And then the death benefit in the end is non-taxable. So if I'm a public bank, for-profit entity, that's a big benefit to me because I know down the road that's going to come through non-taxable. Okay. But what do they do in the meantime? They go to the Federal Home Loan Bank or somewhere else and they pledge those assets for a line of credit to go out and do other things. You follow me?
Yep.
So if I can pledge an asset that I'm not going to touch, that's going to grow at 5% every year reliably, and I know I'm not going to touch it, my plan is to just keep paying and keep letting it go. If you're telling me that all the major institutions out there get to go and pledge those assets for either flexibility or actual cash to go and do other things, well, I think retail users should and could be able to do that as well. Okay. Can they do that alone? Yes. Is it extremely complicated? Yes. Most people don't even know that you have the ability to go out and take a loan against your policy, not from the carrier. They think if I need money from my life insurance policy, the only way to do it is to call the life insurance company and take a loan from the carrier. And that loan's going to be at 5-6+%. What they don't know is I can go down to the bank at the corner and say, hey, I want to take a loan from you. I'll post my life insurance as collateral. And they might be able to get a better term loan. Well, what if instead they moved this real world asset on chain and there was a mechanism to move that real world asset on chain and for their component parts to be broken out into different coins, some stable coins, some longer term assets like the death benefit, right? But if I've got a stable coin backed by real cash value, this is a great example. I mean, Scott, I said earlier, I'm a good example for your listeners who are newer. I didn't own a single crypto asset until 2021. and I got in during that craze. I bought some things. I did what everyone told me to do. I owned some NFTs. I owned some altcoins and some non-altcoins, right? And I'm lucky that I own a single thing now, Scott, with some of the things that we did. You remember some of that during that phase, what people were plugging their wallets into for yield farming and
Yeah.
for pledging and staking, right? And now that I look back, luckily I unplugged my wallet at some point and that those assets are sitting there. Did I take a loss? Oh, you betcha, right? But I know people who plug their wallet into something and it's gone,
Yeah.
right? And so we're now out of that phase of the development of blockchain, and we're into a place where now real world adoption. Why are we using Provenance, Prov Labs, also known now as Nuva Labs? We're using them because they specialize in TradFi compliant blockchain. They specialize in working with major institutions on making sure that the on-chain use is compliant with real world compliance divisions, right? And that's a big thing. So their figure.com that has, gosh, at this point, it must be between 15 and $20 billion, if not more, in HELOCs on chain that the clients didn't even know being on chain was a part of the process. They just knew that they had better pricing. Why did they have better pricing, Scott? It's because using blockchain made the value proposition streamlined and it enabled the provider to cut costs that they passed through to the user, right?
Yep.
That's a real world asset that's now on chain. And you're seeing this. This is why you didn't hear, Jamie Dimon in 2021 saying all real world assets will be on chain in 5 to 10 years, right? You see people like him and even him now saying that, though. That's where we are in this new phase of development. Life insurance is no different. In fact, it is probably the best example. Okay. So, cash value life insurance, we are using the institutional grade products right now. The LifeNotes Trust is one great example to be able to move these assets on chain and streamline the efficiency of administration and value proposition. Where this will lead us is to a place where individual retail users will be able to participate in the same type of maneuvers that these institutions can. And the reason it will be worthwhile is because they can do so in a method where they can pool their assets with other users on chain. And those assets can be posted as collateral for those trusted, verified, traditional companies who are using on chain to go out and use that collateral to go and do other things and pass through some of that excess yield to the user. So my whole life mutually owned whole life policy is on chain pledged. It's sitting there. It's not stripped of its value. It's pledged for collateral, and it's still growing at 5+% from the carrier. All the while, it's driving additional yield, some of which is being passed through to me as the owner and back into the contract. So I've taken my 5% yielding asset and possibly made it 6 or 7. Yeah, so it's a big difference. Now, a thing I want to make sure I hammer here, these carriers, the Mass Mutuals, the New York Lifes, right? They are just stalwarts in the U.S. financial system. They have not made massive high risk decisions historically, and thankfully, people understand now. Blockchain is not a massive high risk decision, right? Saying blockchain used to be synonymous with crypto altcoin, right? Now people actually understand blockchain is a technology, right?
Yes.
And these larger traditional institutions are able to take advantage of the technological advancements here that have been coming for the last decade plus in blockchain and the new technological advancements within AI. And you marry these two things and you really have something special, right? Agentic AI and blockchain creates a very unique value proposition to some of these legacy companies. And we're excited to kind of help bring them into this new world with a product like this.
So if somebody was interested in getting involved, they want to be a part of it, they want to create a policy. And I love that of course, AI is is part of that as well. What would be the process for someone if they see this video or they hear about you and they're like, wow, I want to know more about this. I want to, how how do I get involved? How do
I think one of the reasons this has taken off so well to this point, and the trajectory has been steep and fast, is because it's been strictly institutional, right?
right?
And there's speed that's allowed there. I think individuals need to start studying these products and understanding them. And I think that eventually the demand by the end user is what's going to lead to this, right? I'm not looking to build a carrier. I'm not looking to issue life insurance right now. But I think that the life insurance issuers, they better be ready to use
Yeah.
AI to improve their processes, especially around acquiring life insurance. Scott, you said you got life insurance a couple years ago?
I've had it for about 10 years, actually.
10 years. Do you
Yep.
remember the process of getting it?
Got to fill out the application, go through the process, had to have a health screening, I believe, as well.
Blood,
Do your
urine.
physical, the whole,
They had to go to your doctor.
yeah.
Right? So, look, I'm expecting in the next 5 years for not just life insurance companies, but healthcare institutions and healthcare systems and hospitals to leverage blockchain and NFTs, HIPAA compliant NFTs. Imagine if your attending physician statement, which is something I promise you the carrier had to request, was in an NFT that you had access to hand out, right? Imagine that. Instead of
Wow.
it took whatever carrier you went through. Is it possible? Can I ask what carrier do you know offhand you
It's
have?
a Banner Life, I think it
Banner Life.
is.
Yeah,
Yeah.
Banner Life, their agent or whomever you worked with, they had to work with or pay somebody to go and get your attending physician statement from your medical care provider. Now think about this. You're paying an agent. You're paying a middle person to go get your medical records. They have to pay your doctor's office to fax that document to them. Then they got to give it to the carrier. They got to pay for a nurse to come out and take blood and urine. They got to pay for that to be processed. They got to pay for the report. All of this. Life insurance can and should cost about 50% less than it does. And this technology will help that. Now,
Yeah.
the carriers can do whatever they want. They can charge the same, especially for these mutual companies. My gosh, charge the same. Go ahead. Just let that be reflected in my dividends, right? I'm
Right.
a mutual owner. I'm a part owner of this company,
Yep.
right? Pass that through to the retail user in some form, either in cost savings or an increase in performance, right? So AI will lead to the decrease in cost of acquisition of life insurance. I envision a world where life insurance carriers are underwriting the death claim instead of the individual, right? Imagine instead of going through what you went through, if you just have to answer 10 questions, give it a general idea.
Yeah.
And then if you ever have a death claim, they're able to use AI to determine if you deceived them, right?
Wow.
Now I've eliminated all of that,
Yep.
right? And I can pass that savings through to the retail user. That's massive. And this is the type of thing that new technology will afford us, right? Especially if these assets are reflected on chain, right? If I can go in and I see, instead of having to ask, hey, can I get an illustration? Can you send me a PDF of my life insurance policy? What if it's showing up in my wallet? What if my life coin is in my wallet? My life coin and my death coin are in my wallet, right?
Yep.
That's powerful.
Wow.
Some of the things I'm describing to you are not even things that we are developing. It's things that we know are coming, and we're positioning ourselves and the technology that we've pioneered to tokenize life insurance to be able to take advantage of, right? That's where we're leading. And again, imagine I've got Lifecoin and Deathcoin in my wallet. If I go out and pledge some of my Lifecoin, right? I'm envisioning a world, and look, I'm just spitballing with you here now.
Sure.
What if I want a mortgage and my credit score isn't good enough to get the rate that I want? But they'll give me a mortgage, but it's at a higher rate. But if you pledge some of your Lifecoin, you can get your rate down. Think about that.
Yeah.
I mean, we've worked with banks for years. And one of the things that we've noticed is the ability to leverage preferential collateral, right? So real estate is one type of collateral, but what can real estate do? It can go up and down in value.
Yeah.
But if I own a life insurance policy, especially one of these fully paid up ones, they call them custom whole life policies, I know it's going to go up in value every year. Here's another thought. What if I could buy a life insurance policy, that $10,000 premium we talked about earlier?
Yep.
What if I could buy it and by pledging it, I'm able to offset some of my premium instead of increasing my yield
Wow.
and make that more affordable, right? So this is the scope of where we're going. There was a Supreme Court decision in the early 1900s that deemed life insurance personal property. And this is really important because it enables individuals to do what they want with their personal property, right? The carriers are not going to say, no, Scott, you can't take your whole life policy and go and do that. We don't like it,
Right.
right? Now, what I want to make sure we do is I want to work with the carriers to make sure that we're maintaining the conservative nature of economic efficiency and the conservative nature of a risk profile of how insurance carriers operate. That's something that's really important to us. This is not a go out and pledge your asset into some crazy thing, right? But to be clear, people can do what they want with their personal property. And your life insurance policy is your personal property. But look, whether it's us or somebody else eventually, I can promise you there will be an on-chain issuer of life insurance. And what I'm excited about is this industry will either get supportive and innovative, or someone will step into that vacuum, right? And the community of blockchain and crypto is a really cool, unified community. And they want to see the furtherance of the development within the community. I think people should own life insurance. I think they should own more cash value life insurance than they already do. And I think that this will encourage people to do it. I think it will increase the value proposition of owning these products, right? Think of a portfolio. Think of looking at your portfolio, not just at, I mean, this is something I worked at and as an advisor and managed advisors selling life insurance, and they had a very difficult time helping their clientele and their prospects to understand that this is a meaningful aspect of your portfolio. And it should be a meaningful aspect of your portfolio. Scott, what does that sound like? That sounds like Bitcoin. That is something that people are now trying to communicate. Bitcoin should be an aspect of your portfolio. You're seeing traditional financial advisors now say that. Those same advisors for centuries have been saying life insurance should be a part of your portfolio. Well, bring that asset into the new age of technology.
Right.
Let me open my wallet and see my Bitcoin, see my Solana. Let me see my Lifecoin sitting in my wallet and understand what it is. How much did your life insurance policy grow last year? What was your dividend? I don't know. I have one currently with New York Life. It's an amazing company, blue chip product. It's worth more than what I've put into it by a fair amount. I don't remember what it went up by last year. It'd be awesome if I could just see that, right?
Yeah.
That's what blockchain has introduced. Transparency and speed in transparency. Not just transparency, but speed and transparency.
What is your guess or perspective on from a standpoint of time, like going into putting life insurance on blockchain with the life token, life coin? Where do you see projected times of like how this could see more, I guess, mass adoption?
I think this is an end of 2026 conversation, right? That's what we're seeing, right? I mean, this is institutionally going to be being adopted in Q2, and I think quickly we'll see adoption in either Q4 or Q1 of 2027.
So it's coming fast.
It's coming fast, and I want to tell people, look, there's no need to take the risks that you took in the 2021 cycle, right? There's no need. I mean, you get to due diligence these things properly, right? And that's why we're pioneering this space, but I'm not out here trying to tell people, go to this and plug your money in here and do. That's not where we are, right? We're operating at an institutional scale right now for a reason, right? And this will be available to retail users, and they need to prepare for it and plan for it. And my advice is, if you were thinking about buying life insurance, buy some whole life insurance. Buy it from a mutual company like Mass Mutual, New York Life, Guardian, Lafayette Life, right? And get ready to be able to increase the value proposition that you have right now.
One last question for you.
Yeah.
What is your for where you want to take Infineo in the next like 12 to 18 months, where, I mean, if you could share like what you'd like to see happen within maybe that time frame.
I want to see multiple major blue chip mutual institutions leveraging this technology, leveraging our technology to bring it to their clients to increase the value proposition that their clients are experiencing. That's what I want to see. That's why, look, I'm not here to replace, centuries long mutual companies.
Right.
They're fantastic and they're needed. And there's a reason why they weren't getting bailed out in 2008, 2009, right? And so I want to see them be able to take advantage of these new technologies in a responsible way. And we certainly believe that what we've done helps them in accomplishing that.
If people want to know more, and this was a tremendous amount of information you gave, is very, I'm really glad that you sat down with me. But if someone wants to know more about what you're offering, where could they go? Do you like your socials? I mean, I'll post everything in my description of the videos and everything that I talk about, but where's a good place for someone to start?
Yeah, absolutely. Look, Infineo.ai is our website. Our LinkedIn is Infineo, Infineo. My X handle is JayRogersII. That's Jay Rogers 2. And that's my name, Jay Rogers the second. LinkedIn, I'm Jay Rogers, CEO of Infineo. And our chief economist, Dr. Robert Murphy, he has, I mean, decades worth of videos. He has a podcast. He's a great person to follow, and can provide a lot of insight into kind of his thinking. He's one of a great thinker on the concept of infinite banking. And I do believe that life insurance, intersecting with blockchain and AI, I mean, it's not infinite banking. It's something completely different that is superior. And again, I think it's really important too to understand these legacy institutions have done a great job of stewarding this product and not getting tempted to try to go out and force growth and drive excess yield, right? They've done a great job of maintaining stability and conservatism in financial stewardship. And we want to make sure that is continued, right? And there are bad actors out there,
Mm-hmm.
right? There are bad actors that want to convince you that, oh, I'm a part of this slow moving conservative pace of financial stewardship, but that's not what it is, right? And so you got to be careful. But yes, please follow us on LinkedIn, on X. Dr. Robert Murphy is often on Spaces and speaking to these concepts. So yeah, we're excited to meet some of your listeners.
Well, Jay, thank you so much for being with me and taking time out of your busy schedule, and sharing with everyone who listens. And I want to encourage everyone to go check out the resources. Again, I'm going to put everything in description. We're going to have everything where you can find out the official links for Jay to go find out what he's doing. So, sir, I appreciate you being here. Thank you for taking your time on what's today? Friday? It's Friday.
Friday.
On a Friday. And I appreciate everything, and I learned a lot, and I know my viewers and subscribers will as well. So thank you so much.
Thank you so much, Scott. Really appreciate you, man.